I'm Epstein, and here we are with your SPDR ETF stock market wrap-up. And this wrap-up is for the evening, as we're here now on Thursday, the 23rd of January, 2025. All right, my friends. Interesting day. President Trump, via video feed, addressed the World Economic Forum in Davos, Switzerland today and gave his whole spiel. It sounded almost like a campaign speech at times. But he wants the Saudis to drill more oil. I don't think they're going to. Why does he want it? He wants the oil price down. What do they want? I don't think they want oil prices down. So that was my take there. He's threatening tariffs for, any countries that have a huge trade balance with the United States. He certainly wasn't looking favorably on Canada. He really singled them out as a problem. Didn't do so with Mexico, which I've been saying in my futures video. I don't think he's going to. I think they have really come a long way under Ms. Sheinbaum, President Sheinbaum, and done a better job. But you don't know. As for China, forget it. They're going to get a tariff. Europe's looking at it as well. So what is going to be tariffed will be the big questions. None of us know. We know that they're supposed to happen February 1st. We'll see what goes on from there. Each time we look at the stock market, what I can tell you is a sea of green. The market likes what it's seeing under the Trump administration. It likes some of the things he's doing. I don't see how the president can remotely win the birthright issue that he's trying via presidential order to remove. It's in the Constitution. And if you're born on U.S. soil, you have a birthright. Now, if that changes, somebody's got to make a change, but it can't be the president. That part's pretty darn clear. As for sending 1,500 soldiers to the border, that is good. I didn't quite get the answer what they're going to do there, but that's good. He has shut down a lot of this. I can't wait to get the first figures of the crossings and the illegal crossings for the, we probably have to get into March. It's not very fair that you measure that from the day of the inauguration, and here we are just days later. Let's understand, he's 72 hours in, and to think that you're going to be able to take data and measure it against him in the first 3 days, I pray you don't, because it doesn't make any sense at all. All right, let that go by you, and we'll see what the markets are going to do. In terms of news, well, it's earnings season. You're getting that. Want to remind you, for those of you that like futures, and why should you? Because what do you think DIA is? SPY is based on. IWM, I can go on and on. BND, TLT, GLD. So you might want to go over to iraepstein.com. Not only do we have our morning futures video there, but we have our SPDR ETF video in the word research. It's not the ones that you see on the front of the web page. It's deeper in, because that is where, by law, I can come out and say, buy here, sell there, do this, do that, because it's all behind passwords and protected. You cannot, as you know, we in the industry of finance, cannot just come out and do things. You'll see that, be it CNBC, be it Fox, be it Bloomberg. There are things you can and you cannot do. And we just pay attention to them. This isn't cowboy land. This is the land where you try to do the right thing. All right. Maybe we should go to the news of the day before I do anything else. And tomorrow, in terms of government reports that come out, not earnings reports, we'll get plenty of those. S&P Global Group, the preliminary January manufacturing and service sector PMIs, they're at 845. You're going to get existing home sales data for December. That will come out at 9. University of Michigan, the final January consumer sentiment indices, they'll come out at 9. Don't look for much of a change here. They're looking for about 100,000 more than they got in the month of December, the prior month, right through here. So that would be November that they got. And S&P Global, on their numbers, they look pretty steady at this point in time. So those are the things that I'm looking at least right there. And as you know, I'm off to the races here with Ferrari, okay? And the reason is I've been waiting to see if the market pulls back. And as you can see, you're getting it. You have higher lows, higher highs. So this is where I think the market is going to find some professional interest in it. I'm wrong in my analysis if you get back under 424.41, but if it holds here, the next target's back up, I think, to the 438 level. When I take a look at the Bollinger Bands, the bigger support's down at 415, and momentum-wise, you're correcting present tense and overbought condition. So do I think you're going to get a lot of super aggressive buying here? I don't. I think the market will see the nibblers come in, but you've got to work off, in my opinion, the overbought condition before you do anything. On Dutch Brothers, be, number one, aware that you have the embedded reading, which is super bullish. So the pullbacks are buys until the red line closes under 79. It's at 91. All right. A warning sign, in my opinion, would be if you get under yesterday's low. That could just be a warning sign that maybe the market's tiring. Barring that, why not go for the 62.43 level? In a CrowdStrike, the market's going from the lower Bollinger Band to the upper band. I don't think it's got the momentum here to just keep running. I could be very wrong on it. I'm certainly not bearish. My work is bullish. It's got higher lows, higher highs, but it is overbought at a Bollinger Band. Rivian, this is the zone where I think you're going to start finding the value traders coming in. Right here, right now. You're at 1249. I look at anything from the 100-day average down to the lower Bollinger Band of 1201 in an oversold market, where you're going to get short covering and probably where the value traders will see if that's it. What do they risk? They'll risk down to these old lows, about $3. And if they're right, the market can pop here and who knows where it can go or not go. In K-Web from China. Well, China's pulling all kinds of strings to do whatever they can. They're getting ready for the Trump tariffs. So today, they told the insurance companies they want to see them divesting of certain assets and buying public stock. They want to start supporting the market. Remember, the insurance companies have trillions of dollars they can do this with. So you're getting different ideas as to what they're doing. The one thing I'm not hearing is that Trump and Xi are getting together and resolving the trade issues. Rather, it seems to me each one shoring up what they can do to battle hunk it. In other words, there's no peace coming at this point in time on that issue. In Toll Brothers, notice how you're just sort of stalling out here at the upper Bollinger Band and the 200-day average. You're overbought. That doesn't mean you can't go higher. If interest rates were to continue falling down, that would be a benefit to the market. But as a market technician and you take off the chart the name Toll Brothers, you're at a resistance point and you're overbought. The same is true of the home builders, the XHB. I see the same identical pattern there. I'm not bearish, but I have zero reason to want to just start jumping in right there. In XLF, overbought, but trying to embed. So what does that mean? Well, both numbers were over 90, or well, over 80 is the way to say it today. They were that way on Wednesday, and they were not the day before. Tomorrow's where it makes its decision. Could we get a Friday profit-taking day after these markets have all had a pretty good run for the 72 hours that we've had a new president? It could. That can be the case. You've gone straight up, which is always difficult on XLI or any chart. Forget that it's called XLI. Straight up, where do you put a stop? All the way back there? Where do you enter? Well, I would never have a client enter a long position over a Bollinger Band or under it. So no, not interested there. XLE, I'm looking for more correction in this market. Unless you're up sharp tomorrow, the odds are very strong. Price is going to come down into these moving averages. And I don't mean that the market has to be dramatically higher. The odds are favoring that if you lose this number and it gets into the 79 and under level, especially intraday, you're going to have a problem here, and I think you could pull back on that case. I am friendly the gold market, telling clients that I think there's more upside here, still buying into that, as I think inflation with the tariffs, which are now 8 days away, the market's bidding into that. That's the way that I want to say it. You bid into that, and then when the reality happens, you see what they are. But that's what I think is going on. But the industrial metals should be under pressure because of that. So you have lower highs, lower lows in the silver. It's not in a bear mode, but it's certainly not in a bull mode. And you've got 27.35 to 32, the 200-day average in the 18, trying to act as a support zone. Copper gave up within just hours that upper Bollinger Band and has fallen back to the neutral zone of the 18-day average of closes. BND slipping back as the markets are adding a little bit of yield back into the marketplace. This was the euphoria of Trump, and in the past 2 days, we've been seeing a sell-off right here. In the dollar, this is exactly what I was hoping it would do when I did my special report. You were up here. And I said, look for pullbacks. Market's going to wind itself up. And I still think the dollar's going higher. And I still think the euro and other currencies are going lower before this is all said and done, by a lot, by the way. So in the euro, I view a major warning signal. Circle your chart. If today's low on a daily chart is taken out on Friday or Monday, I view that as a sign that the market has spent its energy and it's ready to a minimum return to the 18-day average, if not resume the downtrend. So you put it together, you come up with game plans, and that's the idea. I'd love you to join me at about 10 in the morning. I record at 9, a SPDR ETF video. I always wait for the first half hour of trade to finish, then I start recording right away. Now, in my SPDR ETFs, every trade recommendation I give, and they're very specific, we track. We track them until they're closed out, win, lose, or draw. We got into more of a cash position at the end of the year, and now we're starting to deploy again. We also look at another new technique that I've come up with, and we track that. How you get to see this all is simple. Go to iraepstein.com, go to the word research, it's there for you. You can move your cursor up here as well. You'll be able to get to it that way. I'm Ira. You have yourself a great evening. I'll catch up with everybody first thing in the morning. Have a good night.